All right, we begin with breaking news this hour. Nigeria's gross domestic product, GDP, grew by 1.87% in the first quarter of 2020. This performance, of course, was recorded against the backdrop of significant global disruptions resulting from the COVID-19 public health crisis, a sharp fall in oil prices, restricted international trade. The performance recorded in Q1 2020 represents a drop of 0.23%, 23 basis points compared to Q1 2019, reflecting the earliest effects of the disruption, particularly in the non-oil sector. The managing director of Cowry Asset Management, Mr. Johnson Chukwu, joins me live to make sense of these numbers. Mr. Johnson Chukwu, you can hear me?
Yes, I can hear you.
All right, fantastic, sir. Okay, so once again, GDP figures for the first quarter of the year, 1.87%. Were you surprised by those numbers? Because some were anticipating they will be actually lower than that.
Well, I'm not exactly surprised. I can also say that I'm a bit impressed that we came out at a print of 1.87%. But if you look at those factors that people were expecting that the GDP will come out lower than 1.87%, people did not recognize the fact that the shift in Nigerian economic activity actually occurred in the second quarter of this year. If you look at what happened in the first quarter, which January to March 2020, normal economic activity actually reigned in Nigeria, unlike in other Western countries. And the lockdown we had in Lagos and Abuja, as well as Ogun State, actually occurred on the last working day in the month of March, which means Nigeria's economic activities were largely remained unscratched or largely unaffected by the coronavirus in the first quarter. One would expect that the impact will manifest massively in the second quarter of this year, but not in the first quarter. Of course, we saw some adjustments in some of the GDP figures. If you look at factors like oil and gas sector, you realize that there was a decline in GDP contribution and the GDP figure for oil and gas sector, principally because the impact began to come in gradually. We also saw a decline in the non-oil sector, which could actually be attributed to some level of supply chain disruption that occurred in China and other countries. But in terms of massive impact of the coronavirus on the Nigerian economy, it would manifest in the second quarter of this year.
All right, fantastic. Thank you for that, Sam. Thank you for taking us through, non-oil versus the oil sector. Can we start with some sectors here? For instance, agriculture. Maybe we can talk about the challenges we're still seeing in each sector. Agriculture, it grew by 2.2% in Q1 from 2.31% in Q4. So slight slowdown there. With what you're seeing in agriculture, what are we still facing there for agriculture's contribution to GDP?
If you look at agricultural contribution to GDP, you realize that the contribution is largely still that of crop production. The other sectors of agriculture, fisheries, livestock are not really growing. So the major growth, which is also why agricultural performance is seasonal, is basically, are we in the harvest season, are we in the plant season, do we have good rainy season that year, or what of the sunshine and all those factors. So our agricultural sector is slightly subsistent, and that's why crop production accounts for more than 90% of the activities in the agricultural sector. So the challenge is that we need to improve the value chain in the agricultural sector. We need to also go for all-season farming to improve the productivity of agriculture. If you look at the level of investment we made in the agricultural sector, it's not manifesting in terms of growth of that other sector. We've seen very weak growth in the sector, still in the region of 2%. And one would have expected that with the level of intervention fund on development finance that central bank has granted to the agricultural sector, we should see faster growth. That is not to say that we've not seen some improvement in terms of crop production, which I said that crop production accounts for more than 60% of the agricultural sectorial performance.
Thank you, sir. Very in-depth. Thank you. But let's move to manufacturing. Manufacturing is a sector that had its own struggles in Nigeria. 0.43% growth in Q1 versus 1.24% in the Q4 2019. So again, like I agree, slow down there. What's your take on manufacturing as far as what we're seeing?
Okay, what is happening in manufacturing is that if you look at the demand, and I think I discussed this when we discussed the third quarter and fourth quarter GDP for last year. The basic thing, the consumer demand has is actually very weak in the country, which also manifested in the trade sector. You saw the trade sector is also in negative. Agriculture sector actually only grew by 0.43%, which was actually lower than the 0.8% it grew in the first quarter of last year, and like you mentioned, lower than the 1.24% it grew in the last quarter of last year. But the basic thing that there is poor demand, and despite the funding or the intervention fund going to the agriculture sector, what is happening? You are seeing a build-up in stocks at the shop floors and the warehouses. There's no strong demand for goods and services in the country due to low purchasing power, and that's what is affecting the agriculture sector. In terms of support, agriculture sector is enjoying a lot of funding from the central bank at sub-market rate, but without demand, you cannot see that sector continue to produce. If you also look at the purchasing managers index in the past couple of months, you've seen it's actually trending at below 50%, which means the optimism for by manufacturers to produce more is weak.
Thank you very much. So you've already mentioned trade. So trade, we saw a contraction. Let's jump to ICT and telecoms. I guess there's something more encouraging growth there with regards to ICT and telecoms. What's your take with that? What we're seeing with ICT?
You know, ICT has come to become the second largest sector of the economy. Has consistently grown to become the second largest sector of the economy. We saw that the ICT sector, you pointed out, grew by 7.65% in the first quarter of this year, and currently account for about 14.08% of the GDP, just behind the agricultural sector. So it's, and I also believe that that sector share of the GDP continue to increase. Simple reason we are moving away from brick and mortar businesses. The coronavirus pandemic has actually triggered a further push to adoption of telecommunication services. We've seen almost everybody adopting telecommunication services in the delivery of their services and products. So that sector is bound to see further growth. And like I said, it has gradually grown to be the second largest contributor to the GDP. It also should be a pointer to the government what we can do if we actually privatize appropriately. The growth we've seen in that sector was principally because of the reforms we did in agriculture, in the telecommunication sector.
Fantastic. Thank you so much for that. So, okay, I also want to now take you to the financial services. Here we've seen, decent growth in the financial services sector, 24%, double digits in Q1 2020 from 22.3 in Q4 2019. I guess, does it speak for itself, the financial sector, as far as your take is concerned?
Yes, if you look at the financial sector, which cuts across the banking industry, the insurance industry, the pension fund industry, we saw consistent growth in the first quarter of this year. Like I said, the disruption we saw in economic activity did not manifest until the second quarter of this year. So that sector has remained buoyant. And that's actually, when you compare to the first quarter of last year, because for you to measure the growth in the sector, you have to compare it to what happened the preceding quarter.
Yes.
If you compare it to the first quarter of 2019, and that's why you are seeing that percentage growth in the financial services sector. But I also believe that will manifest, we will see a slower growth in the second quarter because of the corona pandemic.
And then, sir, this next sector, real estate. The struggles in real estate continue. It contracted even by a larger margin than the previous quarter, 4.75% contraction in this quarter versus the last one. Can you speak to the challenges, and if ever we're going to see positive growth from the real estate sector in Nigeria?
Well, the challenge we have in the real estate sector is still drawing from what I said. We have low consumer purchasing power. And when you have low consumer purchasing power, remember that people who buy in real estate property, make real estate investment are those who are in the real surplus units. Because of high interest rate in the country, unlike in other countries of the world, where people leverage to invest in real estate, here you can't buy a property with loan at 20-25%, because if you do that, the cost of that property will continue to double every 3 years. So people are not leveraging to invest in real estate sector. It's only when the economy is buoyant that you will see a lot of investment going into that sector.
Okay, and okay, Mr. Chukwu, thanks for taking us through those sectors. Is this the best we're going to see from Nigeria's quarterly growth as we push forward into 2020? When you look at the projections for the recession that we've seen from all corners.
Rochus, I think so. I want to believe that it will be difficult for us to grow beyond the 1.87% we grew in the first quarter. The second quarter, we should actually expect a contraction. And this, same with third and possibly fourth quarter. If you look at the second quarter, what has happened is the economic activity was actually locked down for almost the end of the entire second quarter. The second quarter is just April to June, and you saw April and May, there was no economic activities. And then we're moving towards June, and I don't think the economy will be fully opened up. But even if it's opened up, your trading partners are not going to demand for your product, which is a commodity, which is crude. You are not going to see the restoration of supply chain that you can import whatever you want to import from China and other countries of the world. You are not likely going to start flying around. So it's very unlikely that we should see a stronger quarter GDP growth than we saw in the first quarter in the remaining part of the year.
All right, the CEO of Cowry Asset Management, Mr. Johnson Chukwu, thank you so much, sir, for joining us and taking us through Nigeria's first quarter 2020 GDP figures. Again, for our viewers, 1.87% versus 2.55% in Q4 2019. Thank you so much, sir.